Okay, here is the last financial statement that I will mention, right? This statement is pretty complex, right? It's called cash flow statement. The cash flow statement, you need to answer this two questions. Where was the money obtained? How do you get the money? And where was the money put and for what purpose, right? And how will you use the money, right? How did you use the money for what, right? So we will try to analyze what's going on, right, in the cash balance. So the cash flow statement is the use, you need to memorize this one, the use by firms to explain changes in their cash balance. We will explain the change in cash balance over a period of time. So cash flow statement is period of time, not specific date, by identifying all of the sources and uses of cash, right? So we will try to see what's going on, right, for the change in cash balance for the year 2010. We need to take ending cash balance for year 2010 minus ending cash balance for year 2009. This ending cash balance for year 2009 will be equal to beginning cash balance for year 2010. So source of cash is any activity that brings cash to the firm, like sales, right? Revenue that you get from cash, sale of equipment. Use of cash is the any activity that causes the cash to leave the firm, right? Like tax payment, for example. So we will try to see what's going on, right, for the change of cash during the year 2010. This is the balance sheet, right, for the corporations. You see, we have provided two years of information, 2009 and 2010, right? And we see the change of each element for the balance sheet, right? So you see, we try to analyze what's going on for the change of cash balance, right? Once you look at this equation, we need to go over this equation again. Change in cash balance for year 2010 will be equal to ending cash balance 2010 minus ending cash balance 2009. So ending cash balance 2010 is 90, right? Ending cash balance for 2009 is 94.5. So the difference is negative 4.5. We will try to see or analyze what's going on. How come it caused negative 4.5 to happen? Look at this balance sheet, right? Balance sheet equation, asset equal to liability plus equity. So asset will, we can explain to be cash plus asset without cash, yes or no? Asset without cash equals to liability plus equity. If we try to find the chain of cash, we put the chain, the side chain, right, in all the variables. You see, chain of cash plus chain of asset except cash will be also equal to chain of liability and what? Chain of equity. If we move chain of asset except cash to the right hand side, you will get the last line, right? That's why we are trying to analyze the chain of cash, right? So we try to look at the last line equation. Chain of cash will be equal to negative chain of asset except cash plus chain of liability and chain of equity. That's why we try to look at the rest of the item except cash, what's going on, in order to determine or explain negative 4/5, the chain of cash. Look at the first one, right? Account receivable. You see account receivable. Account receivable right here. Account receivable increased by 22.5. Increased by 22.5. What does it mean? It means what? The firm used the cash, right, to invest in account receivable for the customer. The more account receivable doesn't mean the company has received cash yet. Right? Account receivable means you're still waiting for the cash for customer. If you have more account receivable means what? You invest your cash, right, for your customer. So this use of cash by 22.5. Inventory, you see from the balance sheet, right, increased by 148.5. It means use of cash, right, to buy inventory. Equipment also increased by 175.5 million, showing that what? Use of cash, right, to invest in equipment. So in general, any increase in an asset account, whatever increase in an asset account, means the use of cash. Okay, means the use of cash. Any decrease in asset account means the source of cash. Okay, spend the cash. Right. So what we move on to the right hand side of balance sheet. Account payable. You see, account payable means credit extend to the firm increased by 4.5 million. Increase account payable means what? You have more debt, right? You have more cash, right? So this is source of cash. Long-term debt increased by 51.75. Also what? You have more proceed, right, from bond, right? This is also source of cash. Short-term debt increased by 9 million. Also what? Decreased by 9 million. Meaning you use your cash to repay for the debt, right? Repay the debt or debt repayment. So this means the use of cash. Retained earning. Retained earning increased by 159.75. Meaning what? The source of cash, right, from your operation. You have more money, right, more cash from your operation. So in general, an increase in liability account, anything increase from liability means source of cash. A decrease in liability account means use of cash. So if we put all of the source of cash that we mentioned earlier together, increase in accounts payable, increase in long-term debt, increase in retained earning, those are all source of cash. We get total source of cash for 216, right? 216. And then also put together the use of cash, right? Increase in account receivable, increase in inventory, increase in net PP&A, decrease in short-term notes. So total use of cash is 220.5. So the source of cash is lower than the use of cash by 4.5, right? Negative 4.5. So this negative 4.5 equals to the change of cash balance, right? From the beginning. This is the meaning of explanation what's going on for the change of cash, right? By looking at the rest of the item for balance sheet. Analyze the company operation for 2010, right? The firm used more cash than it generated, resulting deficit of 4.5 million, right? Why? Because the primary source of cash flow was retained earning, right? This is the biggest source of cash, 159.75 million, followed by long-term debt, right? And the largest use of cash was what? Buying inventory, right? 148.5 million. So here is source of cash again and use of cash, right? Any decrease in asset account, any increase in liability account, any increase in owner equity account are source of cash. Use of cash, increase in asset account, decrease in liability account, decrease in owner's equity account mean use of cash. Okay, the problem is you know the concept source of cash and use of cash, but the knowledge here is not the cash flow statement format. We need to put the knowledge that you have had into the format of cash flow statement, right? This is the format. We start from beginning cash balance, right? Adjust or plus with cash flow from operating activity plus cash flow from investing activity plus cash flow from financing activity equals to ending cash balance, because we want to see in deep detail why the firm use the cash for or receive the cash from, right? For the three major activities: operation, investment, and finance, right? So that we know what's going on, right? Operating activity represent what company's core business, including sales and expenses. Basically, any activity that affect net income for the period, right? Or any item, right, that's spontaneous with sale, we include it into operating expense. Operating activities, right? Investing activity includes the cash flow that arises out of purchase and sale of long-term asset. By long-term means more than 3 months, right? So any marketable security that maturity higher than 3 months, right? We also put it in investing activity. What about maturity lower than 3 months? We call cash equivalent, and it should be included into the cash. Financing activity represent change in the firm use of debt and equity, such as issue of new share, right? Payment of dividend, except interest payment. Why? Interest payment is part of net income, right? So you pay interest and then you get income. So this financing, so interest payment should be or must be operating activity, except once you issue common stock, right? Proceed or the money that you receive from common stock issuance is financing activity. Once you issue common stock, you need to pay dividend, right? Common stock dividend, that is also financing activity. You issue preferred stock, you get the money from preferred stock, that is financing activity. And also you pay preferred stock dividend, this called what? Financing activity as well, right? What about bond or interest, or you go to borrow short term, or you borrow money from the bank, you make the loan, right? You get the money, so that is financing activity. But once you pay interest payment is operating activity. So in order to construct cash flow statement, there are 4 steps, right? The first step, define activity for each item in the balance sheet, right? Whether or not it will be operating, investing, or financing. Step 2, define whether or not each item is the use or the source of cash. Number 3, put it in the cash flow statement format. And number 4, double check the answer. Double check the chain of cash in the balance sheet with the net cash from 3 activities, right? If it's equal, they are equal, so you get the right financial statement. Okay. So again, look at this corporation again, right? Boswell. We are trying to construct the cash flow statement. We try to see what's going on with negative 4.5 by looking the rest of the item, right? So please follow the 4 steps right here. 4 steps. Step 1, define activity, right? So you go over the first item. Besides cash, you see account receivable. This is spontaneous withdrawal, right? Should be operating activity. And is higher means what? Again, use or source of cash. It means the use of cash, right? Any increase in asset account means the use of cash. Inventory, what activity? Inventory is operating activity because it's spontaneous withdrawal, right? Increase means the use of cash, right? And then what else do we have? PP&E, right? Cost plant equipment is what? Investing activity, right? Investing activity. Increase means use of cash. And then what? You see account payable is what? Spontaneous withdrawal, right? And it should be in operating activity. Increase means the use of cash. I'm sorry, the source of cash, right? You have more proceed, more debt, right? Source of cash. Accurate expense means what? Spontaneous withdrawal, right? So unchanged, it doesn't matter. Short-term notes, what activity? Financing activity, because it's not spontaneous withdrawal. Okay. You see, you have less short-term note means you use the cash to repay debt, right? So it will be use of cash. Long-term debt increase means source of cash. You have more money from debt, right? And what activity? Long-term debt, investing activity. I'm sorry, financing activity, right? Equity, you see, equity is what? What activity? Financing activity, right? Retained earning, operating activity is part of what? Net income. Okay. You got 2 steps already, yes or no? Number 1, define activity. Number 2, define whether or not it's cash, use of cash or source of cash, and then use the knowledge, source of cash, use of cash, and put it into the format, right? You got the format of cash flow statement. Start out from beginning cash balance 94.5, right? Just with 3 activities. The first one, operating activity, start out from net income from income statement, right? And then you see the next line, increase in account receivable, is mean the use of cash, right? Increase in inventory, use of cash. Depreciation, you see depreciation is part of net income, right? You pay depreciation before you get net income. So depreciation is non-cash operating expense. You must add it back, right? Add it back because it's non-cash item. So add it back by 135. Increase in account payable. This is also opening activity. It's a source of cash. Sum it up, you get cash flow from operating activity 173.25. Second activity, investing activity. You purchase plant equipment, right? This is the only one investing activity. Cash out means you have what? Use of cash, right? And financing activity, you see decrease in short-term notes, increase in long-term debt, and cash dividend paid to shareholders, right? Dividend will be equal to, you see, dividend payment will be equal to net income minus what? Change of retained earning, right? So this is the dividend that you pay. 45 means what? Use of cash. Okay, so sum it up, you get cash flow from financing activities 2.25. So you take three activities together and sum it up, you get net increase or decrease in cash during the year by negative 4.5, which is the right answer. Yes or no? You see negative 4.5, right, is the change of the cash balance. So you construct the right cash flow statement, and then you get ending cash balance for 90, right? So here is more examples, right? You see cash flow statement in terms of, you know, in the more complex picture. You see net income, right? Start from what? Cash flow from operating activity. We have net income. Adjustment with what? Add back with depreciation, increase in account receivable, blah blah blah, as I said earlier, right? And then here is cash flow from investing activity. You buy marketable security that maturity more than 3 months, is in investing activity, right? And then also we have cash flow from financing activity, right? So we put it together, right? You will get the net cash and the cash equivalent at the end of the year, right? 19500. Okay.